So good day guys, today I'll be showing you how I frame my trade setup and how I trade mostly. So let's come to trading view here. So let me take out all these, let me remove all these indicators, all these lines. So this is trading view. I'm using the free version of trading view. So as you can see here, these are Friday's charts analysis. So and this is a 1 minute time frame. So if you can look from this point here, you will see that there is a fair value gap just right about here. There, if you extend that fair value gap forward, you will see that price respected this fair value gap. Yeah, that's where the fair value gap is, and look at what price did at that point, that fair value gap. Look at what price did. Price consolidates around that fair value gap. And this is a bullish fair value gap. As you can see, it says CB, a BC, buy side imbalance and sell side inefficiency. So price consolidates around that fair value gap, and the next thing that happened was that it spiked up. When it spiked up, it took out all these short-term highs. Taking out this short-term high, and it then created another small little fair value gap just right about here. There. So we can draw that fair value gap right there. Right there. So when it's spiked up, it comes down, it retraces to this fair value gap and then bounces higher. So our setup today that I'll be showing is how to use these fair value gaps. This is a first setup. This fair value gap here, you can use it for your buys. Because when price was retracing, you won't know where it would retrace, but when you draw your fair value gap, you can extend your point of view to this other fair value gap below, but our first entry is this first fair value gap. So as you can see, price respected the fair value gap, spiked upward, created another fair value gap within the range, within this bullish range, because we are bullish right now. So the best place to buy is the midpoint of the fair value gap. So if you take your buy entry there, yes, and you place your take profits, your stop loss. Okay, can move it a little bit lower, below this low. So if you take your setup like this, buying from the midpoint of this fair value gap, you'd have made 2 times your risk. So that's the first setup. Then this is another setup on sell. Looking at this, price shifted. Look at this huge bearish candlestick. Price shifted once to the downside, and when it shifted to the downside, it did what? It created this imbalance here, this fair value gap. When it created this fair value gap, that's your sell entry. You can take a sell from the midpoint. That's the best place to take a sell. Midpoint of the fair value gap, then you take a sell from there. So take a sell, your TP should be around here, your stop loss should be around here. So let's use the arrow. So taking a sell now from here. Okay, so your stop loss should be right there, your TP should be around this area. Extend it forward. Yeah, that's how it should be. So that's where you should frame your setup, and the risk to reward is 1:3. So you're making 3 times your risk.